Good afternoon, everyone. Today is the 17th Friday of November. Hope everybody's doing well. It's roughly about 2 o'clock here Pacific time. Markets are closed. Good week this week, mostly flat, I would say. The markets are gearing up for Thanksgiving week, so that's probably the reason why there's not too much action going on. But still, no big losses. Just overall, the market is continuing to do what I expected it to do. So let's take a long-term view. The Nasdaq was up about 11 points today. Again, following the pattern, let's take a longer term view, a nice cup and a handle and a little bit of a breakdown here, and then a weekly chart starting to make the move up again. If you look at the daily chart, just to give you context, small, slight moves most of this week, literally undiscernible. The last 2 weeks were solid, just beautiful green candles moving up and to the right, getting over one zone, getting over two zone. The interesting part is there is a little bit of resistance here at the 14,149 time frame, and we've not been able to move past that. So that'll be something to watch. But next week is going to be very, very low volume. So don't expect a lot of moves next week. That's on the NASDAQ. On the S&P 500, what I'm seeing essentially is flat as well, up about 1/10 of 1%, 5.8 points. Still trying hard to get out of this zone. As you can see, here's the previous resistance, 45,333, 36. That it's not been able to get over that as all. After that, it can actually go into the 46 zone. But even this resistance, it seems to be a little bit hard to get over. Dow Jones Industrial Average also for the week was mostly up, actually, a little bit better than the other two. But still, I would say, look at that. This is the nice candle on the Dow Jones, much longer, much better than the other two. But today was a flat day, literally unchanged, 1.81 up, 0.01%, literally unchanged, I would say. But look at this for the week. It started out from this very nice, what they call the bull horn pattern. It actually moved up for the beginning of the week and then mostly tended to move a little bit up. This is a very nice flag pattern that is forming. But next week, wouldn't be too excited about the volume next week. One of the stocks that came up on the radar was Ferrari, a very, very good company. So we're going to apply our 5-step process, see where Ferrari is at, why it's come up on the radar, go through our step analysis and see where we end up with. So we always start with the fundamentals first to see why the stock has been moving and where it has been before. So the company has gone from an annualized revenue standpoint, roughly about $3.2 billion, growing at 5%, moved up 20%, and then slowed down dramatically, and then mostly flat since then, 10%, 15% growth. Not bad, but this is not a high growth company, if you will. But still, going from 3.2 billion to 5.45 billion over 7 years is not bad. They're roughly about 50% gross margins, 40 to 50%. That's pretty good. And then net margins, if you look at it, almost $1 billion. So 20% net margins, 15 to 20%. That's very good. That's pretty good. I'd say overall, Ferrari has done a very good job. So annualized basis, on a quarterly basis, that is why they're going up. Look at this. This is a 33% growth year over year on the Q3 timeframe. And that is phenomenal. For a company of this size, 1.6 billion in revenue, almost about 50%, a little bit less than 50% gross margins, very strong net margins. I like this a lot. 15, 20% net margins. Let's make sure that this is a car company, doesn't have too much debt. $8.6 billion in total assets. How many of those assets are current? Current is about half of that. Another half of it is non-current assets. Just give you context to why I look at some of these companies. Some of these non-current assets, I like the investments part, but when they have this intangible assets stuff, that's not really, it's hard to be able to put a finger on it. I'm not going to say it's bad, but there are a lot of companies that put a lot of fudgy numbers in here, such as an acquisition they might have done, and they might have paid extra in cash. And that asset, I'm not sure is going to necessarily help them to a large extent. But net debt of about 1.6 billion, not bad, not bad. I like it, not too hard. Just to be able to look at the valuations, price earnings of 50 for a growth of 33% last quarter, 10%, 15%, not too bad. A little bit on the rich side, but it's a good brand. 10 times price to sales for a car company. And just to give you context, on a quarterly basis, this company was growing at about 15, 18%, now growing almost double that at 30%, 33%. So a little bit rich, but not bad still. I would not say this is a yellow flag. This is just be a little bit cautious. One bad turn and this can take it down very quickly. So roughly about 40-50%, as I said, 50% gross margins, 20% margins, very beautiful margins. I really like this company. No red flags. Let's move on to our technical analysis part. The stock is at roughly about $80 billion, $80 billion in market cap. As I mentioned, they are roughly doing about 10 times sales. That's good. Rich, but 33% growth in the last quarter is probably why they're doing it. So long-term candle on the monthly basis. Oh, this is beautiful. So nice U-shaped pattern, which we call building a base. A strong move up, again building a base. Stage one, growth up. Stage two, building a base, growth up, building a base, and then took a stage for decline, built a base. Just to give you context what I'm talking about, this is called building a base. You could put it this way. That's one way to do it. Or another way to do it is, let me go through this. Another way to do it would be, this is actually a very beautiful, there you go. From here to here, it's formed a nice base, beautiful base. So I like it. I like it so far. The base has been good. And since the base has been formed, it's been on an uptrend, then took a little bit of a small, very small dip. This is the dip, just a retracement on the monthly chart, and then a strong candle this month. So I like this move. Look at this, what happens. This is one strong move, nice flag pattern, and then nice move up again. This is a flag pattern. This is a very nice candle on the monthly and a tight piece of action, and then move up. I like this a lot. So where is it on the longer term? Good monthly uptrend. It's broken through a lot of resistances. There's really no resistance for it on the upside. On the downside, there might be hopefully some support, at least at the near term, I'd say the 293 range, but we'll adjust it as we go along. Let's go to the weekly chart to see if there's any issues. I really don't see any issues on the weekly chart. Just look at that beautiful tight pattern. Maybe adjust this this flag a little bit better. Beautiful pattern. So you'd actually find a little bit of better support for it even here, 299. There could be a couple of reversals even at the 312, but most likely 299 is a very good support point where it would, if it had to go down, it would go up back again. So what would I do? I like this. There's no big challenges for it. This is going to go up and continue to make its move up. Very low volume though. This seems to be, so big jump after earnings, as you can see. Nice pattern after earnings. This is another beautiful pattern after earnings. Not perfect, but still it's a little bit better than what I expected. And then jumping up and jumping up. So it's continuing to make new highs. That's good. Very little volume and a big gap up every time in the morning. It seems to be gapping up week after week. So first week, big gap up, another gap up, another gap up. So it might come back and actually fill this gap at some point in time, not necessarily on price earnings gap, which is a beautiful PEG, but how would you play this? Wait for a little bit of consolidation in the 352, 350 zone. See if it actually moves a little bit lower down into the 342, but I don't think it's going to go down there and fill this gap. So my suspicion is even if you take a little bit of a trade at the 350 zone, you should expect it to go to 370 at least by the end of the year. I like Ferrari a lot. The other thing I would also do is to look a little bit at the next quarter earnings. What did they say in terms of guidance? And disclosure? Most of the okay, so they're going to continue to buy shares, which is a good thing. They're buying back shares, which makes the EPS go higher, which means the stock loss to look a lot better. And every one of the analysts actually seems to have made an overweight on the stock. And let's look at what the analysts seem to be saying. So 359 is the stock. Out of the 20 analysts offering 1-year forecast, most of them are 406. So that's about $50, about 15% move up from here. The lowest estimate is 281, which means the support for it at 293 is the right one that I called for. So I like this stock a lot. I would actually take an entry in this and expect to hold for about a couple of months to 3 months. Good stock. Race is the ticker symbol. Ferrari. Thank you so much for watching, guys.